I'm taking it and I'm going to Hong Kong. You guys ready? Come with me. We're going overseas. We're heading to Asia, and we're looking at some significant jockeying in the Asian market for who's going to be the next big crypto hub. And this is a huge development, I think, should this report prove true. Hong Kong Central Bank is saying, hey, banks, you should take on crypto businesses. You should serve these clients. That's kind of a key missing ingredient for how to establish a crypto hub. If there's hesitancy to bank some of these riskier firms, that's long stifled the ability for these firms to grow up and have the services that they need to provide key services to their clients and their customers. So if this proves to be true and the Hong Kong regulator is saying, hey, we're already pushing our licensure thing, it's sort of the hot ticket in town among a lot of firms, you also need to play ball on the banking side, get with it. That's actually a really interesting development. It's certainly worth talking about as various markets over there look to serve the crypto industry. I'm going to throw this to Jen. I'm really fascinated by this sort of geopolitical horse race, and I think this is a key development on that front.
I'm so interested in watching what goes on in Hong Kong and what that means for crypto in China. You know, there's this real big push as of late for Hong Kong to become not just a crypto hub, but a Web3 hub. And then you compare that to the conversations that we're having in the States, and it just feels like the rest of the world is really making progress, is really getting clarity. And we're here continuously asking the same questions. And it feels like it's just like, you know, throwing a ball at the wall, it's bouncing back, and we just throw, and there's like no progress being made. You know, at the most recent Financial House hearing that was earlier this week, there were a lot of representatives who pointed to the recent banking crisis and kind of made a correlation between their crypto clients and those banking failures. And that's also a conversation we heard while the banking crisis was happening. Now we have the regulator in Hong Kong saying, banks, you got to get with it. These exchanges are going to get their licenses and you need to serve them. You need to be less afraid. I know there's a quote in the story, and I think they said, like, you need to be less afraid of them. And I think that's really interesting. I want to point out that the exchanges that are operating in Hong Kong right now have applied. They haven't received their license yet. I think they have 18 months to do all of the things that they need to do to get those licenses. And it'll be interesting to see how the banks respond to regulators, because these banks are not only banks that operate in Hong Kong, they also operate in jurisdictions where regulators may not be pushing them to operate with crypto companies. I think there's going to have to be like this cultural mindset shift. And I wonder how that's going to affect their operations in the rest of the world. Adam, what do you think?
Yeah, I mean, I think that, you know, when you look at the way that banks have been behaving, and just, I mean, historically, the reality of them is that, especially as we've gone into the modern era, especially with the larger institutions, you're effectively talking about a partnership between kind of the banks and the government. They operate under the regulation of the government. They typically are monitored by the government, and the government uses them as a way to sort of enact certain policy goals, as well as to get insight into things that typically they wouldn't actually have the ability to access. So that's true here in the US, where we have very, very strong civil liberty protections, at least in theory. And that's definitely true in a place like China. And so the kind of interesting question for me is less about what's happening today, and it's more about what happens in 5 years. What happens if a lot of companies make this move and they, you know, sort of set up under a set of rules that they think is stable, but then that creates the preconditions where they need to continue to be in that stable situation. And the stability of the situation is based entirely on kind of short, medium term government priorities and policies and things like that. So that's kind of my concern here, is that the US is not only pushing people out of the US, you know, pushing these companies and projects out of the US, but they're pushing them over to places that have much weaker standards of rule of law. And where, again, even as not great as the US has been behaving, there are definitely problematic things that could emerge, especially if you find yourself established in one of these markets and then things suddenly change for reasons that you had no foresight into and which really are not in your control. So I think it's a dangerous moment, actually, but it is, again, kind of the natural result of the obvious place where this stuff would get built, which is in the West, you know, basically rejecting it because, again, fear of competition, fear of a variety of things. Zach?
Crypto projects are very much looking to Asia, whether it's Hong Kong, Singapore, Korea, Japan. They are very much seeing that as the market in which they need to be more active at this present moment, because that's where the activity is. That's where a bit more regulatory embrace is happening. That's where people are actually using some of this stuff. So the idea that this sort of bolsters that case and is another sort of piece of the picture is absolutely relevant to projects who are thinking about what to do in this environment. And a lot of them are reaching the same conclusion. We need to double down our efforts in Asia in 2, 3, 4 key geographies there. And this certainly is part of that big story that we're seeing, I think, among projects across the space. So another good one to watch. We certainly will do so.